I think the Genius Act and soon, hopefully, the Clarity Act will set the stage appropriately for this space to flourish and for institutions, especially Clarity. I mean, the administration wants it done by July 4th, our 250th birthday, but I don't know if we'll get there. I think once we do, because the odds have gone up recently that it will be passed, that we will see much more of an institutional swoosh into the space.
Bitcoin and the broader crypto market are getting hammered right now as geopolitical tensions in the Middle East suddenly explode into a full-scale market panic. Bitcoin has now fallen below $73,000. Ethereum briefly lost the critical $2,000 level, and nearly $1 billion in leveraged crypto positions have been wiped out in just 24 hours. The immediate trigger came after reports that the United States launched strikes on Iranian targets near the Strait of Hormuz, followed by retaliatory threats and reported missile activity tied to Iran's Revolutionary Guard Corps. What started as a fragile ceasefire environment has now completely unraveled, and global risk markets are reacting fast. At the same time, BlackRock's spot Bitcoin ETF, IBIT, just recorded its largest single-day outflow ever, reportedly losing more than $527 million in a single session. That's a massive warning sign, because spot ETF demand has been one of the strongest pillars supporting Bitcoin throughout this cycle. Now, with geopolitical fears rising, leverage getting flushed out of the market, and investors suddenly rushing away from risk assets, crypto traders are watching one of the most violent sentiment reversals we've seen in months unfold in real time. In today's video, we're going to break down exactly what's happening behind this sudden collapse in crypto prices, why traders were completely caught off guard by the liquidation cascade, what the growing conflict in the Middle East could mean for Bitcoin and the broader financial system moving forward, and why some of the biggest names in finance still believe this market panic could eventually become one of the strongest long-term bullish setups for crypto. If you enjoy these kinds of breaking market updates, make sure to like this video, subscribe to the channel, and let me know your thoughts down below. Thanks, and let's get into it. What makes this sell-off especially important is the speed and scale of the liquidation event. According to market data, more than $950 million in crypto positions were liquidated in just 24 hours, with over 90% of those liquidations coming from traders betting prices would continue to rise. Bitcoin alone accounted for hundreds of millions in forced liquidations, while Ethereum saw another massive wave of selling pressure as traders rushed to exit leveraged positions. In many ways, this wasn't just a normal correction. It was a complete leverage reset across the crypto market, triggered by fear that the geopolitical situation could spiral even further out of control. And this is exactly why Bitcoin continues to behave like a high-volatility global liquidity asset during periods of uncertainty. Even though many investors view Bitcoin as digital gold over the long term, short-term panic events still tend to push traders into cash, especially when oil prices rise, military conflict escalates, and global equity markets begin falling at the same time. We also saw broader weakness across traditional markets, with stocks pulling back and investors rotating into safer assets after the latest strikes and sanctions increased fears surrounding the Strait of Hormuz, one of the most important energy routes in the world. But despite all of this short-term fear, some of the largest institutional investors in the world continue making the case that Bitcoin's long-term trajectory remains incredibly bullish. And that brings us directly into Cathie Wood's latest comments on Bitcoin, institutional adoption, regulation, and why she believes this entire asset class could still be in the very early stages of a massive global transformation.
The way we get to that number, now that is our bull case. Our base case is closer to 750,000. But the bull case involves a substitution for gold. So as generational wealth transfer takes place, we think that younger people are more prone to The second is Bitcoin is an insurance policy, particularly in emerging markets, against fiscal and monetary neglect at best, or corruption at worst. And so, as wealth increases around the world, we think that individuals will shift from stablecoins, and that's been a very interesting development, to Bitcoin, which has much more appreciation potential. But the biggest reason is institutional adoption. That is the biggest. This is a new asset class. It has very low correlation to other asset classes in terms of risks and returns. And so every asset allocator has a responsibility to examine it, because it will increase risk-adjusted returns over time. I think that we're beginning to see the asset allocation shift. And yet we think that because of stable coins, that the dollar will also be strong. So effectively, stablecoin, so USDC, Circle stablecoin, and USDT, Tether's Circle, Tether's stablecoin, they are backed primarily by US treasuries. So to the extent they become successful around the world, we're going to be effectively exporting dollars, and that should be dollar positive. At the same time, we do think there is an asset allocation shift beginning towards Bitcoin and other crypto assets, again, because of the low correlation of returns.
As you talk about these large institutions coming into the marketplace for Bitcoin, crypto, also doing things on the blockchain, will they demand more regulation?
I think the Genius Act and soon, hopefully, the Clarity Act will set the stage appropriately for this space to flourish, and for institutions, especially Clarity. I mean, the administration wants it done by July 4th, our 250th birthday, but I don't know if we'll get there. I think once we do, because the odds have gone up recently that it will be passed, that we will see much more of an institutional swoosh into the space. 21 million units. We're up to 20 million that have been minted. Only 1 more million to go. So, the scarcity value is there. And if you look at Bitcoin relative to even gold supply increases at roughly 1% per year. And it might be more than that, in the next few years because of what has happened to the price recently. Bitcoin is mathematically metered. There will be no supply response. It's just mathematically metered. And right now it's increasing at 0.9% roughly per year. The supply is, which is lower than gold's long term. And in the next 2 years, we'll be down to 0.45% increase per year. So there's real scarcity value evolving now. So
that brings me to this Bitcoin gold comparison, or rivalry, if you will. It felt like we just had this sort of, some economic issues here in this nation and around the world. And it was sort of the moment of truth. It was what Bitcoin was designed for. It was what crypto was designed for. Bitcoin went down and gold erupted higher. And so a lot of people felt maybe that first big moment of truth, when they were ready for the close-up, they weren't ready for the close-up.
Yeah, what's interesting is if you look over time, and I'll say since 2019, when institutions started considering this new asset class, you'll find a very low correlation between gold and Bitcoin, digital gold. Very low correlation. It's 0.14. So almost no correlation. But if you zoom back and you look at a chart, what you will find is in the last two cycles, gold has actually led Bitcoin. So it is very interesting in recent weeks how they've exchanged places. Bitcoin has developed a little bit of momentum. It's certainly in a bottoming out process, and gold has given way. And I think one reason that might continue, Gold and the dollar are inversely related. We believe the dollar is going to go up because the return on invested capital here in the United States is rising relative to that in the rest of the world, thanks to deregulation,
Right.
tax cuts, and so forth. So the dollar going up, we believe, is going to be a negative, a slight negative for gold here.
Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. On one hand, we're watching short-term fear completely dominate price action amid war headlines, liquidations, and macro uncertainty. But on the other hand, major institutional investors and policymakers continue to lay the groundwork for much larger long-term crypto adoption. In other words, while traders focus on short-term volatility, some of the biggest players in finance are focusing on where this industry could be heading over the next 5 to 10 years. And we're already starting to see that political and regulatory shift accelerate in the United States. President Donald Trump recently stated that his administration plans to codify what he called a future-proof digital asset market structure that cannot be undone by anti-crypto policymakers. Trump also stated that previous regulatory hostility under Gary Gensler pushed innovation offshore, while arguing that America is now becoming the crypto capital of the world as companies and entrepreneurs move back into the United States. Those comments come as lawmakers continue pushing major crypto legislation forward in Washington. Senator Cynthia Lummis is now publicly calling on Congress to send the Clarity Act directly to President Trump's desk, arguing that clear crypto regulation could unlock the next phase of institutional adoption across the industry. And this ties directly back into Cathie Wood's argument that regulatory clarity could become one of the biggest catalysts for institutional capital flowing into Bitcoin and digital assets over the coming years. Because, regardless of the short-term volatility we're seeing today, the long-term battle over crypto adoption, regulation, and the future of global finance is still accelerating behind the scenes. But as always, I want to hear from you guys. Do you think this latest sell-off is simply another panic-driven liquidation event that Bitcoin eventually recovers from? Or do you think the growing geopolitical tensions could create much larger problems for crypto and financial markets moving forward? Drop your thoughts in the comments below. And if you enjoyed this video, make sure to leave a like, subscribe to the channel, and turn on post notifications so you never miss another market update. Thank you guys so much for watching, and I'll see you in the next one.